Mason, welcome to TradeAlyticsLive.com. Today we're going to talk about how to trade specific chart patterns. We've been managing money professionally for about 12 years. As of today, September 10th, year to date, my portfolios range from 20 to 37% increased since January 1. Why is that? Because these specific chart patterns are very repetitive, and all we have to do is be patient enough and have the foresight and the conviction behind our trades to look for the same chart patterns over and over and wait for them to set up and develop and then execute effectively. The first one that we're going to look at today is called a bullish wedge pattern with an ascending support line. We're using APA, Apache, as an example on a code red that we put out through TradeAlytics Live this morning. As you can see here, this is on a daily time frame. Keep in mind, the bigger the time frame, the bigger the move. The shorter the time frame, the shorter the move. This one's been setting up since June, where it bottomed out, and you can see the ascending trend line coming all the way up here, followed by a horizontal resistance, which has been trying to get through for the past 3 or 4 times. And you can see how it's starting to tighten up. This one looks like it needs a little more time. However, there's a lot of strength coming into this sector. There's a lot of market momentum, and volume was about 48% above normal when we identified it this morning. So here we have a buy trigger above $90, adding more above the high here at $90.20. Once this stock gets out above that resistance on big volume, you have about a 68% chance success rate that there's going to be a large move coming out of this wedge pattern all the way up to a gap fill trade and the next resistance area of $95.33. Now here's a couple key things that you have to identify before you decide to have a high conviction and hold this stock overnight. Number one, is this going to be an active trade for you, or is it going to be a longer-term momentum trade? There's a few key things that you have to look at before you make those decisions. Number one, what is the volume rate as it breaks out above this $90.20 area? Number two, how is it acting compared to what the market is doing? Is it showing relative strength? Is it showing relative weakness? Or is it just a pop and drop? What I mean by pop and drop is it just popping up above that 90.20 and coming back down really quickly, which is a false breakout? Or is it slow and steady? One way to find out is let's pull up a 15-minute time frame, and you can see how it's a nice and slow and steady intraday chart pattern. All you have to do is just simply draw a line here, and you can see how it's stair-stepping higher, higher, and higher. Once it does this, and we get a confirmation above that $90.20, there's a good chance that you can add to your position. Before you do that, and before you decide to hold overnight, you've got to make sure that the stock is going to close strong on big volume, and it closes above that $90.20 breakout. If this happens, your success rate increases from 68% to 98% chance that the trade will work. Let's pull this back to a daily time frame and see where it's at now. If it closes above $90.20, and knowing that big volume is coming into the close and your odds increase to a 98% success rate, it gives me as a professional trader more conviction to add size into the close and look for a gap up in the morning, which could produce a gap and go. Now I'm looking for a $4 to $5 move out of this stock up to the gap fill. What you don't want to do is get greedy and try to hold your position all the way to that target area. What I like to do is start with a larger position, selling portions of my positions on the way up into those inflection points. This one happens to be right around $91.63, locking in a $1.63 profit, selling a third. If it gets above there, selling another third right into the 94 area, and then keeping the last third, raising my stop to 93 at this point to lock in profits all the way across the board, selling the last third into that gap fill, and volume, big volume coming into that target at 95. Now why do I do that? Because I'm now protecting my downside risk. I'm selling on the way up into strength, so I'm protecting my profits, and I'm booking a good return. A 5-point move on a $90 stock is going to yield me about a 5% move, and it could happen all in one day. It could happen in 2 to 3 days. But a 5% move on a stock is a very good return to only have in your portfolio for a number of 1 to 3 days. Again, this is a bullish ascending wedge pattern. Tune in tomorrow for another type of technical pattern that we like to trade. And there's, again, this is number 1 of 10. So Scott Mason, Tradalytics Live. Hope to see you soon. Tune into our website and trade live with us from 9 to 4 daily. Enjoy your afternoon. Today is September 10th, and it's 12:40 in the afternoon. Have a great day.